This meeting is being recorded.
The Fed is clearly winning. We have seen inflation come down, headline come down from 9.1 to 7.1, with expectations on Thursday, with headline coming down further to 6.5%. It is my belief that people will start to celebrate and celebrate loudly and proudly. I do also believe this will be a little bit of celebration early. To have this conversation, we're bringing on the one and only Taylor from Life Goal Investments. How you doing, buddy?
Doing great. Thanks so much for having me. I think that you're seeing the celebration play out right now. You saw it last week, right?
Yeah, Friday was a good day.
Short-lived. Granted, I know we're looking at a day or two, and you're getting some follow through here today. But yeah, there's no doubt that the celebration was definitely underway last week, and it was interesting. You kind of had bifurcating information that came out that really drove the result that we're seeing here, and one piece of that information seems to be getting a lot more weight than the other.
Yeah, I think really what we're seeing is it's all about inflation. And again, the number, or the thing that you're pointing to on Friday was the wage number inside the
Correct.
jobs. Because if you look at the jobs number, it was more than expected, right? It was 232 or whatever on a 200.
Yep.
Generally speaking, that's not good. But when you see wages come down, and I also think there was a negative adjustment to the month before, kind of
Correct.
two negative whatever. Yeah. The market's like, yes, wages are starting to slow down, the final leg, and we can all celebrate the Fed winning. So that's what I think happened. 700 points on Friday, the follow through today. We also are getting earnings announcements, pre-announcements, kind of negative. Macy's, Lululemon, Chico, and others. But yeah, it certainly seems like the Fed's winning. What do you think?
I like Macy's puts it out Friday after the close. That's an idea.
I saw that. I'm like, nice touch, Macy's.
Which I just thought was hysterical. But no, I think you're right. I think that right now what you're seeing is the market's getting a little bit excited that the Fed might be able to pull off a soft landing. I still don't think it happens, but look at it this way. Look at what the market's looking at right now. They're going, hey, employment numbers are still high. On the, all in all, high employment, full employment is a good thing, right? That's a good thing in general. If we can control inflation. So if they can keep employment numbers high and bring down that wage growth, that's not something that usually goes hand in hand. Usually, as there are less people unemployed, it drives prices higher, but that's not what's playing out right now, or at least for a 1 month period of time, right? Very short lived. And I think we got to see some follow through data there. And I'm a little bit suspect whether that can continue to happen or not, but you're 100% correct. The Fed has, at this point, if you're just looking at a 1 month period of time, has done a masterful job of keeping inflation tamed, or at least beginning to tame inflation more so than it was, and keeping full employment on the table, which is crazy to think those two things can play out simultaneously.
Yeah. So, the odds of a soft landing is something I've said on my channel, and I want to just give it to you and let you react. I've always thought it was unlikely, but possible, right? I think if you were to ask me a month ago, I would have told you 2%, right? Something low single digits. After Friday's number and kind of my review over the weekend, I'm like, you know what? I got to raise it. I took it all the way to 15%. So again, it's not my base case, but it's not, a tail risk either at this point, right? It's kind of coming in.
Yeah, I thought you were going to say something like, hey, I raised it to 30 or 40%. Then I was going to say, I don't agree. But at 15%, that's perfectly fine. I totally agree with where you're at there. I think what also came in last week, which was really interesting, was the consumption data.
Yeah.
And basically what you saw was anything above 50 shows consumption is growing, and anything below 50 shows consumption is shrinking. And we were expecting, the market was expecting to see a consumption number of continued expansion as people continue to go out and spend money. And it was the exact opposite. And I think that was the one that's going underappreciated right now. And I think that what you saw in the bond market, not the stock market, the bond market, was a swift and sudden reaction to that. So you usually don't see double-digit movements in yields in a week, but the 2-year Treasury came down 20 basis points. The 10-year Treasury came down 30 basis points.
Yeah.
And so what that also means is that that's a further inversion, which is a negative foreshadowing kind of thing that plays out in the market. So right now you have 67 basis points of inversion between the 2 and the 10-year Treasury. The market right now is saying, the bond market, which is traditionally the smart money, is saying that we will see a recession, and it's going to come via the hands of the consumer.
Yeah. I think there's a couple of things coming that I want to make sure we get into this. First, we'll talk about Thursday and our expectations, right?
Yep.
The
Yeah,
market,
for sure.
last I checked, was expecting headline at 6.5, and core at, I actually wrote it down, 5.7. How do you feel
Okay.
about those numbers? Where are you? Are you above, below any of those numbers?
I'm moderately below them. I have gone from a camp of thinking that inflation is going to slow rapidly to it's going to be stickier, but it is continuing to precipitate down. And I think that the expectations are still a little bit too high. I think that they will come down inside of both of those numbers. And I think that consumption data that came out last week really shows that is real potential. As you know, we are Americans, and Americans at their core are spenders, and you're seeing the spending start to slow down, and you're seeing on the other side, obviously, the wages start to slow as well, at least on a 1 month period.
Yeah. So if I were to, I'm actually going to agree with you on this one. I think headline comes in a little soft, at least it's my hope. But I actually think core, the one that I've been kind of ringing the bell going, pay attention, you guys aren't listening. I think core is going to shock it like 5.5 or 5.4. I think there's been, and again, I think it's all goods inflation. And this is kind of my point in the intro. I think these numbers are going to shock lower. People are going to over celebrate and not realize that what we just saw was the last month of the easy inflation rolling off, right?
Yep.
We saw
That's
the
a fair
good
assessment.
stuff.
I agree.
Yeah. So that's where I think we are. Then it gets harder. It still goes down, but it's harder. And I think everybody's just going to party hardy on Thursday, and then it's going to be wild to watch the opening.
We get Powell comments tomorrow, I'm pretty sure.
Yeah, Tuesday. Yep, tomorrow.
Yeah, so we get Tuesday, right? So we get Powell comments on Tuesday, and he is going to be staunch.
They're going to all talk tough. They're all going to talk tough.
He sees what's going on right now, and he's going to come out and say, guys, higher for longer. I've told you this. I'm going to tell you again. Stop getting excited. There's no party. I'm going to continue to slam on the brakes.
We're not cutting. Yeah.
Right.
Yeah.
Yes.
Yeah.
Exactly.
Yeah. Then Bullard comes out Thursday as well. So again, I think there's a couple of things that, the Fed's got two tools, as I talk about. There's the every 6-week open market meeting, which we talk about, but there's also their voice, and they're going to flex it this week.
Yep.
Pretty hard.
And it's interesting. Bullard had been at one point a hawk on the Fed. He had been saying, hey, let's take rates higher, et cetera. I actually appreciate someone that changes their tune, because he is not a higher. He is just someone that's willing to dissent and look at the data and tell you what he thinks, because he's recently said that I think we're almost sufficiently high to have inflation under control moving forward. So I got to appreciate him for his willingness to step out. Now, I do think there is a little bit too much jabber that goes back and forth by Fed members, prompting themselves up, putting themselves on a soapbox. And, at some point in their next career, this will be something, if they create a name, that they can carry through. But no, I do appreciate his willingness to kind of sway and alter his opinion based on the incoming data. And I think he's done that better than everybody else.
Yeah, I would agree with that. And then we got to talk about what we expect for February 1st. I am sticking with my 25 that I've been talking about for months. Last week, pre-Friday, I will admit to you, I was like, damn, if that Friday number comes in hot, I may have to change, but it didn't.
Yeah.
So I'm sticking with my quarter. I don't think they do 50, and I certainly don't think they do 0. I think a quarter's coming.
I'm with you 100%. I don't even think I have much to add to that. Again, the numbers came in a little soft, and depending on what happens later this week, that obviously could dictate it one way or the other, but I'm with you at 25 basis points now.
Yeah. And then the last thing I want to rope in here at the end is I'm starting to believe that when Jerome Powell was at Jackson Hole and he said pain was coming, I think a lot of us interpreted that as the middle class and the poor. I think what we have clearly seen since Jackson Hole is he's coming after the uber rich. He is saying there are too many billionaires. There are too many people worth $100 million. I think it was Wall Street Journal wrote an article this weekend talking about, people worth $100 million being 75-25 illiquid versus liquid. And they're feeling the pain, right? They don't have cash to fund their lifestyle. They have to recognize losses. It's becoming a bloodbath for the uber rich. Elon Musk was the first guy ever to lose $200 billion. I think there's a lot more. Yeah, I just hate when that happens. Yeah. Damn it. $200 billion I lost. But I don't think people realize that Powell is going after the 0.1, the 1 and the 10%. Those are the people that own the assets, and those are the people that are getting crushed. fit, there was an article I read, I think it was 2 months ago, that the bottom 50% since Jackson Hole's net worth is up, and the top 10%, the 1%, and the 0.1% are all down double digits.
Interesting.
Yeah.
I wouldn't have guessed that because Jackson Hole was what, in August?
Yeah, August, 6 months roughly.
Yeah, so the market hit a low in what, October? So the market was on a tear actually mid-August. Mid-August, I think August 15th or something like that, it hit a high water market, then pulled back to October, and then has rallied since October. So maybe it's flattish, something like that since then. So I guess maybe what's playing out there is, and you can see me looking up with my brain trying to work here, which is scary. But I think maybe what happened there is there's a spill through effect that you got wage growth on the bottom
of course.
end.
The bottom 50% have seen wage growth. They're cash flow positive when you hear the Bank of America and all. And this, again, I think was like November data, right? So it's a couple months old. And again, let's be very clear. They were positive $9,000.
Right.
It's not like a huge number, but it was positive. While the 0.1, the 1%, and the 10% were down double digits. So,
well, think about this. The VC market is basically frozen right now.
Oh yeah,
so,
frozen.
And
commercial paper frozen. Yeah.
You're talking about 75% of this being illiquid assets. A lot of that is, VC type angel investments. And I'm not saying it's all that, but nonetheless, that definitely
it's just an example.
What's going on.
Well, think about the B REIT from Blackstone, right?
Yep.
All these, folks that were happy with 10%, but now they're, they need cash to fund their plane or whatever the hell they're doing. They just, they have a liquidity problem. So now they have to recognize losses. And the point is, who said this? I'm going to get his name right. Eric Peters, Chief Investment Officer of One River Asset Management, said that the Fed wants to slowly bleed these folks, and they want them to recognize losses and raise liquidity.
Yep. So, and I mean, they're doing a masterful job.
Bang up job. Look at Elon Musk selling $40 billion in stock to raise cash.
Yeah, so again, and there's flow through things that happen here. Like FTX wouldn't have played out had the Feds not been on the brakes as much as they have. And that obviously is that VC world, again, all spiraling, being super interconnected to that 1%er.
Yeah. There you go, folks. This is a lot fun conversation. Taylor, you put out amazing stuff every day on your Instagram channel. What is it? And so people can follow and say, hey, I came from one rental at a time.
Yeah, thanks so much. Our Instagram channel is @LifeGoalInvestments. And again, it's just macro stuff, trying to make sense of the world for the layman investor.
Now, you do a wonderful job of taking complex things and make them easy. And some of your stuff is just remarkably fun and entertaining. You're very good at it.
I was told the other day I'm not funny. I'm like, I'm not. That's who. I'm not funny.
You're funny to me
in other ways.
There you go.